Imagine trying to understand a conversation in a language you don't speak. You might catch a word here or there, but you'd miss the real meaning. For centuries, traders listened to the market through intuition and experience. But today, the market speaks a new language, the language of data. Every price tick, every news article, every economic report is a word in a vast, ongoing conversation. Data science is the art of translating this conversation. It's about using scientific methods, processes, and systems to extract knowledge and insights from massive amounts of structured and unstructured data. It's the grammar that helps us find the patterns and stories hidden within the noise of the market. So, why does this matter for trading? Think of it like this. A traditional trader might notice that a stock often goes up in the morning. This is a pattern based on personal observation. A data scientist, however, can look at 10 years of minute-by-minute data for that same stock. They can test that morning rise hypothesis against millions of data points, checking if it holds true on Tuesdays, or after a holiday, or when a certain economic report is released. Data science allows us to move from gut feelings to data-driven convictions, transforming trading from a high-stakes guessing game into a strategic discipline based on evidence and probability. This shift is not just about confirming old ideas, it's about discovering entirely new ones. The market is a complex system, with countless variables interacting in ways that are far too intricate for the human mind to track simultaneously. Data science gives us the tools to model this complexity. We can analyze the relationship between a company's stock price and the sentiment of social media posts mentioning its brand. We can map how a change in oil prices ripples through the transportation and manufacturing sectors. It's like having a superpower that lets you see the invisible forces that move the market, providing a much clearer picture of potential risks and opportunities. Essentially, data science provides a framework for asking better questions. Instead of just asking, will this stock go up? We can ask, under what specific conditions has this stock historically gone up? And are those conditions present right now? This methodical approach helps traders build robust strategies that are less susceptible to emotional biases like fear or greed. By grounding decisions in objective analysis, traders can build systems that are repeatable, testable, and refinable. It's about building a solid foundation of logic and evidence beneath every single trade, making the entire process more intelligent and deliberate. If data science is the language, then Python is the pen we use to write it. Python is a programming language, but it's beloved by traders and data scientists for its simplicity and power, much like a versatile multi-tool. Its syntax is clean and readable, making it relatively easy for beginners to pick up. More importantly, it has a massive ecosystem of free, open-source libraries. These are pre-written bundles of code that handle complex tasks, so you don't have to build everything from scratch. Want to download historical stock prices? There's a library for that. Need to perform sophisticated mathematical calculations? There's a library for that too. Let's look at a simple conceptual example. Imagine you want to calculate a simple moving average, or SMA, a common tool traders use to smooth out price data and identify trends. The idea is to find the average price of a stock over a specific period, like the last 20 days. In Python, using a library like Pandas, this becomes incredibly straightforward. You would first load the stock's price history into a data structure. Then, with a single line of code, you could ask Python to calculate the 20-day rolling average for the entire history. It might look something like this. Stock_data, SMA_20e equals stock data close. Rolling window equals 20. Mean. This simple command unleashes immense power. A trader could manually calculate this on a spreadsheet, but it would be slow and prone to errors. With Python, you can perform this calculation on thousands of stocks in seconds. This allows you to build and test trading strategies at a scale that would be impossible otherwise. For instance, you could write a script that scans the entire S&P 500 index every single day. The script's job would be to find stocks whose current price has just crossed above their 20-day moving average, a potential signal to buy for some traders. This automation frees up the trader to focus on higher-level strategy and analysis. Beyond just calculating indicators, Python enables something called backtesting. This is the process of simulating a trading strategy on historical data to see how it would have performed in the past. You can write a Python script that pretends to buy and sell stocks based on your moving average crossover rule over the last decade. The script would then report back on how much profit or loss your strategy would have generated, its biggest downturns, and other key metrics. This is like having a time machine for your trading ideas, allowing you to test and refine them in a risk-free environment before ever putting real money on the line. Now, you've used Python to gather and analyze a mountain of data. You have moving averages, backtesting results, and performance metrics. But rows and columns of numbers in a spreadsheet can be overwhelming and hard to interpret. This is where a tool like Microsoft's Power BI comes in. Power BI is a business intelligence tool that specializes in data visualization. Its job is to take your raw data and transform it into beautiful, interactive charts, graphs, and maps. It's the difference between reading a dense academic paper and watching an engaging documentary that brings the story to life. Think of a Power BI dashboard as the cockpit of an airplane for a trader. It consolidates all the most critical information into one place, presented in an intuitive visual format. For example, a trader could design a dashboard that shows their portfolio's performance. One chart might be a pie chart showing the allocation of their capital across different sectors, like technology, healthcare, and finance. Another could be a line graph tracking the total value of their portfolio over time, compared against a benchmark like the S&P 500 index. Numbers that were once scattered across different files are now integrated into a single, coherent view. The real magic of Power BI is its interactivity. These aren't just static images. A trader can click on the technology slice of their pie chart, and all the other visuals on the dashboard will instantly filter to show data for only their tech stocks. They could see which specific tech stock has been their best performer, how the group's value has trended over the last month, and any upcoming earnings reports for those companies. This ability to drill down and explore the data on the fly allows traders to ask questions and find answers in real time, turning data analysis from a chore into a dynamic process of discovery. Let's imagine a practical use case. You've backtested a strategy in Python and exported the results. You can connect that data to Power BI to build a strategy analysis dashboard. You could have a bar chart showing the strategy's profitability by month, helping you spot seasonal patterns. A map could show the performance of trades based on the headquarters location of the companies. Another chart could show the average profit for trades made on a Monday versus a Friday. This visual feedback loop is crucial for understanding the nuances of a strategy's behavior and for building confidence in its effectiveness before deploying it in the live market. If Python is the engine and Power BI is the dashboard, then artificial intelligence, or AI, is the intelligent co-pilot sitting next to you. AI in trading takes data analysis to the next level. While traditional data science often focuses on finding known patterns, AI, particularly machine learning, is about training computer models to discover complex, non-obvious patterns on their own. It's like teaching a computer the intuition of a seasoned trader, but an intuition that is powered by the ability to analyze millions of data points in the blink of an eye. This co-pilot can process information far beyond human capacity. AI tools can perform a variety of tasks to assist traders. One of the most common applications is predictive modeling. An AI model can be trained on decades of historical market data, including price, volume, economic indicators, and even news headlines. Its goal is to learn the intricate relationships between all these inputs and future price movements. The model can then be used to generate a probability. For example, a 75% chance that a particular stock will increase in value by more than 2% over the next week. This doesn't guarantee a win, but it provides a powerful statistical edge to guide a trader's decision. Another powerful application is sentiment analysis. AI models can scan thousands of news articles, social media posts, and financial reports every second. They are trained to understand the context and tone of the language used, classifying it as positive, negative, or neutral. A sudden spike in negative sentiment around a company could be an early warning sign for a trader, long before it's reflected in the stock price. Top AI trading platforms often present this as a simple gauge or score, making it easy to see the collective mood of the market towards a specific asset. Several powerful AI tools are now accessible to retail traders. Platforms like Trade Ideas use AI to scan the entire market in real time, identifying trading opportunities that match specific criteria and strategies. Tickeron offers a suite of AI-powered robots that search for patterns and provide real-time buy and sell signals. TrendSpider uses AI to automatically detect trend lines and chart patterns on a technical chart, saving traders hours of manual drawing. These tools don't replace the trader. They augment their abilities, handling the heavy lifting of data processing, so the human can focus on strategy, risk management, and the final decision. Together, Python, Power BI, and AI form a powerful trio, making trading smarter, more data-driven, and more accessible than ever before.